good, especially the.
Okay.
Can you hear me, sir?
Yes, I can hear you. You were saying?
Yes, especially the trend line strategy. Before you taught it,
Yeah.
I picked it up on the chart myself on how I
Oh,
can
wow.
analyze a trend change. Yes. So I was really happy and thrilled. That
Okay.
means that meant it was the right one for me to use going forward.
Okay.
You
That's good.
solidified it. You
That's good.
you you put the cherry and everything. Yes.
So let's move into today's teaching. Now, this might, depending on how both sales. There are like two other parts, but I want to leave that one out of it. But this might be the last one. Now, when it comes to successful trading, the first part is the trading strategy. I keep saying this because it's true, because I've seen it in my own trading. And undoubtedly, the first part is the trading strategy. The second part is your psychology. Which is more important? Psychology part. However, the the trading strategy is very necessary, and this is why I taught something very important, very profitable to the group, so that everybody has something that works. I'm glad all of you are seeing success with it. It's simple, it's straightforward. So let me just go straight to your point. I wanted to show something to the swing traders in the house because they keep complaining that, oh, I'm not seeing a trade set up. You know, this person is getting a trade, me, I'm not, and they feel left out. When it comes to swing trading, right? Before we go into our psychology, swing trading takes time to form. For a swing trader, you even sustain more losses sometimes than a day trader, right? It takes a while for a swing trade to form. Sometimes it's as simple as this. It just takes, even this thing I'm calling as simple as this, it took I think 3 days to form the setup. We have one day, another day, third day for this setup to form. And then the fourth day was when it broke out, and you would have been in the trade for, because now you know the system, one, two, into, I think maybe into the third day before the trade is over. So your time span is not the same. Whereas while you are holding this long move and swinging and taking a trade, someone inside the fractal of your trade is looking or finding a trend line to break, to enter, and to day trade. And it's normal, right? Which should you pick? There is no perfect system. But if you're a day trader, if you're a swing trader, your mood or your strategy or your time span rather is not the same. So what do I do as a swing trader? Because people keep coming into my DM, so I want to really answer that. You start your analysis from the monthly or the weekly time frame. Monthly, to be specific, start from the monthly time frame. And what are you looking for on the monthly? You're trying to ascertain direction, right? When you get a sense, like this, when you get a sense of direction, the next thing you do is to go to the weekly and the daily. Say, for example, I'm looking for the market to still expand higher on the GBP USD. I want to still be a buyer. For example, I'm giving an example. So as of uh, here, as of here, I'm looking at the GBP USD buying. This buy has not happened. Then what do? I will go to the weekly time frame. On the weekly time frame, I'm going to look for an opportunity where the market has also either started buying or is showing signs of a swing I can mark. If I can't find that, like this has a level here. How many touches? We have one, two, three. The drives, not so much. One, two, three. Once the market breaks out of it, like it did here, there's a fair value gap here. You can even see the setup. Let me zoom in. Even on the weekly time frame. You know how many pips this is? This is powerful. That's the candle right there, the rejection bar. Can you see it? We have our drive down, we have our drive down two, we have our drive down three. Good. We have one touch, two touch, three touch. Good. That's good. Breakout, yes. Fair value gap, yes. Return, yes. Does it give the setup? Absolutely. Then you enter the trade and then you allow the market to move in your direction. Now, If you cannot be this patient, what do? Go to a time frame lower, go to the weekly and start your analysis. So what do I do when I come to the weekly? Let's assume that I am looking for a sell. Let's say before this market dropped down, or let's say when the market started to move higher, let's use the higher, it's moving higher. The market is going higher, and I want to see a scenario that gives me a buying opportunity. So the market started to buy from here. So I'm here now, right? Let's say I'm here. And then from where I am, I'm looking to see buying continue. Excuse me. I'm looking to see buys continue, right? What I will just do is go to the next time frame. This is very simple if you're a swing trader. This is where I marked. What's going on, my cursor? This is where I marked, right? That I want to see Sorry. I want to see buys from here. The next thing you will do is to go to the daily and or the 4 hour. What are you looking for on the daily or the 4 hour? You're looking for a market that trends lower. I've explained this before. You're looking for a market that trends lower. And if you see that, that's when you have a trade. Do we have that here? It's not as clear as we want. You will look for the same thing here. Here I can't find one I can measure, and it's fine. You wait. That's the plight of being a swing trader. You wait. What are you waiting for? For any time you see an opportunity where the market is trending lower, okay, we have one here. Can we mark that? This is why in trading they say wait for your setup to form. Perfect. Can you see it? We have a low one, then a test one, another low. Yes, then it doesn't test. So this is the next drive we will look at. It touches, but I would have preferred, personally, I would have preferred that the market dropped lower than the previous drive, right? But let's use this example, seeing that we've been waiting for weeks without a setup. So let's just say this example. We're in a buy trade from where? From the weekly and from the daily. This is a trend. Do you see the break? Yes. Do you see the fair value gap? Yes. Now to answer another question. I used to tell you just ask a question. If I'm doing a video, I'll answer it. Do we have a rejection candle? Not as much as I would like it, but this is fine because we have 1, 2, 3. We have almost 3 of them, but not twice. Like this one is fine. So let's assume we don't have anyone. What do? You can go to the immediate time frame lower. So if this is the 4 hour, go down to the 2 hour. Let me mark it so we don't get confused. What are you, if you see a rejection candle, better. If you don't see a rejection candle, look for an engulfing bar. If you do see an engulfing bar, take the trade because your time, notice I did not mark from the higher time frame. I did not mark from the lower time frame. I marked the trend line from the higher time frame. I'm only here to look for this guy. And sometimes if you need to wait for it on the higher time frame, if you don't see it, you can go to the most immediate time frame. I didn't go down to the 1 hour, I went to the 2 hours. You don't want to go too far. Otherwise, you'll see what you're looking for and it's a wrong trade. So this is a trading opportunity right here because we have this. You can see that. It's very simple. Your job is to use the higher time frames and wait with it. I know that the euphoria of being a day trader can sometimes creep on you and you are looking for it. The most important thing in trading is following your rules. And this is the most difficult thing. And this is why mentorship is required to take people through the process. Many people, they are not really bad when it comes to trading. They just need that guidance. And that's one of the things people lacked in my own trading journey. I was glad that I think 2 years in, that was when I got guidance from mentors. Most people you respect. I've served under 2 of them, like directly, physically. So that was where it changed from. That's where it made sense to me that, okay, this buying of courses really does not do well as much as leading you through the journey, holding your hand through the process. And when I check the statistics of people who signed up for this particular course, and most of them have been learning from other people. So what was missing was that personal guidance. And it's true because it's easy to buy a course or mentorship. It's not, and many people don't want to do this work. This particular one I'm doing, it takes a lot of work, trust me. But This is the movement. Now compare your movement in pips as a swing trader to a day trader that is catching just this. A day trader would see a trading opportunity. Here, there is one here. The markets, if I go to a lower time frame, I might not. I might find a trend line to trade off of. I might not. For you as a swing trader, from here with your stop loss here, your 1:1.5 is a huge chunk of pips. So I hope with this, I've been able to reassure swing traders that this works. Don't listen to the day traders. It's because, okay, I can trade, I can swing trade, I can day trade, and I mastered the system. I know how to use it. And there are other parts, right? There are like other parts that I don't know how to teach that completely here. Some of them will, it's mainly in the mentorship, it will be revealed, right? So now, this is one of the things where people have issues when it comes to trading. Now we have a trend line, we have a trend line break, and we have a retest, right? Maybe we have an engulfing. An engulfing is here, we can use that, an engulfing trade. But the market did not go down. First things first, it doesn't all go down. I always say this. It will do 1:1 point. This is a system that has been tested, right? So the testing says 1:1 ratio, 1:1.5. If you don't know what 1:1.5 is, beginner's class will start tomorrow, so stay tuned for that. If you do know, you understand what I'm saying. If the fair value gap is huge, put it above the high of the fair value gap. But I like the swing high, right? I like to keep it away from the trend line. 1:1.5, if you can see very well. Oh, this is even 1:3. Let me zoom in. So I hope we're understanding what I'm saying. Now, this is exactly what I'm pointing out to you. You can see that for a swing trader, even this one is like it's big. It's a chunk of pips for you. If you are waiting for it to get there, it might not sometimes. And the second thing is direction. And directional bias is one of the major things that affects traders, and is because it takes skill to master. I've been doing this for over half a decade. So directional bias takes skill. So if you're taking a trade against direction or you don't know direction, stick to 1:1.5 like this, because directional bias will push trade it will go beyond your trend line. The lack of directional bias thereof will stop it at 1:1.5 sometimes or less, right? And yes, you will take losses. If you follow the rules, the losses will be minimized because it works, right? Now, when the market shifts and it starts to trend lower, you look for a trend in the opposing direction. And when you look for a trend in the opposing direction, the market breaks, you wait for a retest, go to the most immediate time frame lower, look for an entry. I hope with these few points of mine, I've been able to reaffirm to swing traders that you do have opportunities. Your own don't just come the way they do. To all those who send me messages personally telling me thank you too for paying attention to this. Your benefits will come in from practice. Now let me go into the meat of why of today's meeting. This part of trading is very important, but this is not everything. My goal for traders is consistency. If you are interested in hit and run, feel free to run with whatever I've taught you.